Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, February 27th, 5:08 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the O'Neill follow-through days, November 1st and 2nd of last year. Trend gauge in the upper right, you can see we've got the, say it with me, coveted 4 green arrows indicating bullish uptrend for market leadership, as well as all 5 of the major indexes, which we track across 3 time frames. Those 3 time frames being the short-term 21-day exponential moving average, the medium-term 50-day moving average, and the long-term 200-day moving average. These arrows dictate how much we're comfortably investing in the market for clients. So what happened today? Second straight day of small cap leadership. That means breadth will be expanding, or did expand. And nice rally into the close on S&P 500 and NASDAQ 100, sparked by a kind of an announcement from Apple that they're giving up on their Apple Car. And the market liked that. Anytime you go way outside of your core competency like that, it doesn't really, usually doesn't end well. And in this case, they've burned quite a bit of cash on this, but they're probably redeploying that into AI so they don't fall behind there. Here are the numbers on the day. The Big 7 up 0.6%. RG8 is our 8 growth ETF composite, up 1.01%. S&P 500 faded all day right until 1 o'clock. Then that Apple announcement came out and it turned around and rallied into the close. Same thing with the NASDAQ 100. Those were up 0.17 and 0.24% respectively, while the equal weighted additions did better. Again, that's an indication of breadth doing its job. Dow down 0.25% as the highest weighted stock in there, undergoing some antitrust reviews, that being United Healthcare. Mid caps up 0.4, Russell 2000 small caps, here's the leader, up 1.34%. Global 60/40 just barely positive, 0.07%, as bond prices pulled back, meaning yields higher. In-house GROTECTION up 0.42%. Let's get to it. First, I want to mention our flagship portfolio named GROTECTION. It's designed to participate in market uptrends and grow capital during these times and protect during market downtrends, such as the 2002 big bear market and the harsh pullback into this third quarter of last year. So basically, we follow the trend across 3 time frames, very much indicated by these simple colored lines that we have here. And then, of course, when we're in a healthy market, we look for market leadership. And that's what we've been doing since this follow-through day inflection point back on November 1st and 2nd. So here's the S&P 500. Let's show a 60-minute chart here. Here's that downtrend, that 3-day lower high, lower low, just bleeding lower, but then an abrupt halt to that. You can pretty much see it on a 5-minute chart here. Here's the undercut. This coincided with Apple breaking 180. As soon as Apple broke 180, this announcement came out, and you can see the rally into the close. Let's bring up Apple just for clarification. There you see, actually, what time was that on Apple? It wasn't one. No, it's 2 o'clock that Apple did the 180 undercut. Blast to the upside and then pull back a little bit into the close. But on the S&P and the NASDAQ, the rally started right at 1 o'clock. So let's go to the NASDAQ here. And you can see nice tight trading here. Let's go to the 60-minute chart. You kind of had the same situation with the declining tops trend line pullback since that gap up on Friday, kind of indicating exhaustion after the subsequent gap up the day before on NVIDIA's big earnings report. But either way, on both of these big cap indexes, we broke that declining tops trend line. Here's the Dow Jones Industrial Average, the weakest of the day today, but still holding the 8-day exponential moving average. Again, that's United Healthcare. UNH, you can see down 2.27%, down another 1.2% after hours. That's going to be a drag on the Dow. Mid caps, MDY making higher highs here, trending above the 8-day exponential moving average. So that's good stuff, good for breadth, and small caps even better for breadth. Breakaway gap here, and coming up to the top of this flat base that it's forming, which is really a high handle from this cup. And I've showed weekly charts here. We really can move quite a bit. We're nowhere near highs on small caps if we decide to break out, if the market decides to break out and head higher on that. How about the VIX? VIX cooperated, did what you'd want to see it do, down lower, below the 200-day, below the 21-day, sitting right on the 50-day moving average, under that 15 level. That's where we want it. Dollar kind of traded in a tight range today. Not a whole lot going on there. Gold and silver stocks and silver were all lower. Bitcoin definitely not lower. Gap up 4.38%. We own IBIT. Up 4.72%. You can see this is pretty much a really nice cup and handle breakout here on the daily chart. Broke out yesterday, followed through today to the upside. So Bitcoin and the Bitcoin complex really rocking today. Bonds, tight range trading today, down a little bit on price. There's the broad bond index. TLT is the long bond index, down there as well, meaning yields were up higher. Here's the 30-year. Up a bit. Really, we've been in about a 3-week consolidation here on bonds since this shakeout back near Fed time. And then TNX, the 10-year, up slightly today. Let's go to the tail of the tape. You can pause this and read the details. I'll hit the highlights. Durable goods weaker than expected before the open. Consumer confidence below expectations at 10 o'clock. Both of these data points are what the Fed really wants to hear. They're looking for anything to tame inflation, pull inflation down, so they can worry about having to raise interest rates and, in fact, pivot over and start cutting them the way they've talked about wanting to. We had a little bit of a sell-off today as one of the Fed heads was flapping his gums about we're not doing the job on inflation, and we had a bit of a sell-off there, but we recovered from it. Day count up 1 with a 3-day consolidation after that big up move on Thursday. 4th day above the 8 EMA, 35th day above the 21 EMA, and that's 78 out of 79 last trading days, going all the way back to 11.2 on the S&P 500. Trend lower for 3.5 hours, trend up for 3 hours, so a nice close. Sectors leading, I mentioned Bitcoin, retail, biotech. We'll talk about biotech in a second, but that's been rocketing. Regional banks bouncing back, as well as utilities on the downside, energy, healthcare, and gold and silver stocks. In-house on the portfolio, we added 2 positions, rebought AMD, started Ralph Lauren on the pullback, and we offensive trimmed on LABU as XBI got almost 4 ATR extended from the 21-day moving average. So some offensive selling there. Net result is raising our beta from 1.22 to 1.29. Bottom line on the day, day 2 of small caps leading, Apple sparks, NASDAQ 100, S&P afternoon rally. Let's take a look at a couple of charts. I already showed Apple, but one of the reasons why XBI, which, as we said, got extremely extended today. You can see it up 5.7%. LabVIEW is at 3 times. This is what we were in. We trimmed half of it today, up 17% on the day. When you get, gains 18, 20% in 2 days, don't be a pig. Take some of them. That's what we did today there. And one of the reasons for that was another weight loss drug with stellar phase 2 results. VKTX up 121% on massive volume. The difference with this one versus the Lilly and NVO products is that it's taken orally, and it also is not just GLP-1. There's another GIP. I don't know exactly what it means, but it's got a dual approach to the weight loss. Mild side effects reported, just a stellar phase 2, up 121%, and that jump-started biotechs. I showed Apple. Let's show Kava on their earnings report, breaking out after this pullback last week, up 12.2% on the day, and TMDX, another earnings winner, after a brutal shakeout yesterday. Gapped up 14%, made new highs briefly before pulling back. As far as the portfolio goes, Ralph Lauren, here's that pullback we were looking at for the 8-day exponential moving average and the corresponding 60-minute stochastic. Briefly hooked up when we bought it, continued a bit lower in the afternoon, but that's a low risk entry point for us to take our starter position. And then AMD, very similar. Pullback bounced off the 21, and in the morning we had the 60-minute stochastic cross over too after a morning shakeout. So getting back into that. We showed Bitcoin and we showed LabU. Those are the two big winners on the day. Square, which we trimmed half of yesterday, had a nice bounce back day, up 4.1%. Weatherford, which we added yesterday, continued to pull back today on light volume, back to the pivot. Normal action there. Lilly initially gapped down on that VKTX, but finished near the top of the range and reclaimed the 8-day exponential moving average. And then the three biggest positions, CrowdStrike, started strong, faded a little bit. NVIDIA, NVDA, started weak, but then closed strong. And then Uber. Uber closed mid-range, up 0.5% on the day. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, you can email my partner, Dan Stewart. That's dan@revereasset.com. Also, like and subscribe on YouTube. We answer all comments. And we appreciate you liking and subscribing, as it helps the algorithms. We've heard a bunch of people, just say, this just suddenly showed up on my feed. Where has it? Your video just suddenly showed up on my feed. Where has it been all my life? And well, we haven't been on YouTube for your whole life, but we certainly appreciate getting the people that follow us to help us out and promote our content. And with that, I'm going to wrap it up for Tuesday, February 27th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.